Welcome everyone, another back and forth of Becker and Orr, and we're talking interest rates as the lead-off topic. Are we going to see a rate cut? Will there be more rate hikes? We're going to start with that, then we'll talk inflation and have some fun with a lightning round. Lots to get to today, Kevin.
That's right. I'm Becker. That's Orr. This is Back and Forth, another exciting episode, and we want to start to dive right in it. We're going right to rates. Rates. Are we getting a rate cut by the end of the year, Clint, or are we actually looking at the opposite stuff going on? What's happening now?
Yeah, we have to address expectations right off the hop because expectations have changed. This is from the All-Star Charts Plus, and the orange bars was what was the expectations as of February 1st, the blue bars as of March 1st. Essentially, the orange bars are telling us that as of February 1st, the market was expecting that by the end of the year, the U.S. rates would be the same, if not lower. So same or a cut. And then as of March 1st, the exact opposite. The market is now expecting you could see a 75 or 100 basis points increase by the end of the year with those U.S. rates. So a complete flip-flop there in terms of market expectations of what the central banks are going to do. Again, this is U.S. central bank, but if the U.S. central bank does in fact follow through and you see a 75 beep or 100 beep raise over the course of 2023, it seems highly unlikely Canada would just sit on the sidelines. I think the Bank of Canada would have to follow to some degree, if not anything, just to support the dollar. So I think the whole expectation has changed. It used to be, yep, absolutely getting a rate cut 2023. Now, likely going to see the opposite, likely going to see a few more hikes before this is all said and done. Are you on the same page?
Yeah, and I think this all started for basically one thing that came out in the middle of February that changed the entire dynamic. Beforehand, we'd been seeing inflation going down every month, and we've still seen that both in Canada and the U.S., but we'd also been seeing that job growth had been less and less and less. Then in the middle of February, you get that January job number in the U.S., which blew the market away. 500,000 new jobs. Nobody was expecting that. All of a sudden, the fact that inflation may be coming down, but jobs are still going up and up and up, we're not getting the unemployment you traditionally find with a recession, which means you could have a stickier problem with rates, or should I say with inflation for a while. That, of course, has led to the only way we're going to cure that is higher for longer. And they keep preaching that every time Powell comes out. So I think that a huge dynamic for changing what the mindset is. And all of a sudden it's, 4.25, 4.5 doesn't seem realistic anymore. Maybe we take that a full point higher. That would be where I'm seeing things going. Of course, that can all reverse itself in a couple months if you do see those numbers coming down. But, rates may not be finished just yet. So a rate cut by the end of the year, very thin, I'd say.
Yeah, it's funny that what's driving this is a hot economy. The fact that the economy has continued to grow and there continues to be very strong job growth. And now folks are saying, we got to continue to hike rates to kind of cool off the economy. Because remember, 6 months ago, everyone was pounding the table. There's definitely a recession. Look what their interest rates are doing. And now we're having the opposite problem where the economy is still growing much stronger than we thought it would. And now we got to keep hiking rates to deal with this strong economy. So predicting the future is apparently very hard, Kevin.
It is. I know I need that crystal ball, but it's the magic 8 ball is not working quite the same way it was beforehand. So we'll see where we go from there. But again, all that rate stuff has led us to where we should be, into inflation. And inflation's been the big thing, right? It's a sticky situation. We have seen it come down almost every month since the middle of June, which has been a positive. The rate hikes have been doing their job. But again, is all inflation coming down? I wouldn't say it's all. As a general term, it has. But you're still getting food prices that are higher than they were a year ago. You're still getting that sticky service inflation because people have been locked up for a few years now. They're traveling. They're using all the services they couldn't use for years. That is going to have to start to slow somewhat. Otherwise, you may have inflation sort of stagnate at that 4 to 5%, which is not what they're planning for. They want to get it back to 2 eventually. And, this is where it's going to be a big problem. And if it starts getting sticky, then how far do rates go? But inflation's been a big factor at the moment. And again, what does it have as an effect? You've seen that still inverted curve on the bond yield, which again says recession. But, a year ago, they were saying the beginning of 2023, we're going to see it. Now, maybe the end of 2023, 2024. What do you think?
Yeah, I mean, the recession question, everyone just keeps pushing it back. 6 months ago, definitely recession first half of 2023, maybe second half, now maybe 2024. So I'm not sure on the recession part of you. We'll have to wait and see. On the inflation bit, I'm on the same page, though. It has definitely dropped. I think it's safe to say peak inflation is behind us. But the idea that it'll continue to fall at the current pace, I think is unlikely. Eventually, you'll probably get a slowdown there, and you might still see inflation in the 4 to 5 range, which is significantly lower than where it was. And I should mention, lower inflation doesn't necessarily mean prices at the grocery store, prices for services drop. It just means they go up at a slower pace or stop going up. And I think that's the environment we're entering. And that is kind of relates to the prior topic, which means we'll probably see interest rates at a higher pace for a longer period of time. So it all kind of links together. They're higher for longer and probably some stickier inflation. In services, inflation is the key bit, right? Because the whole thing before was the manufacturing, the supply chains. I think we've worked most of that out. But now it's everyone's traveling. It's all the services we use, and those prices aren't going anywhere. And they remain quite elevated. I don't think that's going to change in the near term.
No, and again, I mean, basically, we're dealing with economics 101 here, right? I mean, if the economy does go into a recession, you're going to want to stimulate it. How do you stimulate it? You cut interest rates. That's the one thing you do. But if all of a sudden we're getting that soft landing, or all of a sudden, we're not really going into recession, we get to that point, then yeah, I mean, they're preaching right. Those rates are going to stay higher for a while because there's no real need to get rid of it and lower it, because you don't need to stimulate the economic growth going forward because you're still getting it at that point in time. So yeah, I mean, the inflation thing's a sticky question. And as you mentioned, service inflation has to come down a bit, and until it feels a big pinch and there's no jobs out there, well, this may go on for a little while longer. So yeah, maybe the Fed was right in what they've been preaching for the last year, and people have just not been buying it. So we have to see how that plays out that way. But I think that covers the inflation thing. Time to get to the lightning round and how things work. Do you want to start, or do you want me to go? How do you want to play it?
Oh, I think I'm going to go start us off here, Kevin. A couple of quick questions. I'm going to put you in the hot seat. And before we get too far into this, I'll let you know right off the top, I'm starting with sports. I'm starting with the Jets. And it's only because we have some secret footage here of you watching a Jets game. I must admit, you look very young in this clip. The last 10 games, the Jets have won 2, and you've been doing that a lot, I imagine. It's been a rough last 10 games. They
didn't show me throwing things. That's the thing. Throwing stuff at the TV and yelling at everybody else. That's exactly it. So that's me in a Jets game right now, and I'm just keeping the faith and going forward. All right.
There we go. What's the first question is a two-parter. Way they're playing. They're going to make the playoffs, and if they do, they have any chance of getting by the first round.
I would love to be the eternal optimist, but the way they've been playing recently, actually, the team has played well. They haven't had the goaltending in the last few games. Before that, they had the goaltending. The team couldn't score. I am having a hard time believing in the current state that they are going to make the playoffs. It's a 4-point cushion with Calgary right now, and you still got, almost 20 games left. I am going out and I'm saying, unfortunately, I don't see us going. I hate that.
A realist there, I suppose, a realist.
Yeah.
Quick political question for you. Federal election, we see one in 2023 or in 2024?
Ooh, you stole what I was going to talk to you about earlier. I would say I'm going to wait till 2024. And the only rationale I've got behind that is, this Chinese scenario that they're talking about right now with interference will not go away. But I just do not see the NDP pulling the trigger yet, for fear that you get a conservative government and they will have no say. Right now, they still have some say because of the minority status. I think they hold on to that till at least 2024. So I'm saying, nope, not this year. We're going next year.
All right, quick market question for you. 2023, been a little rocky February, March, but phenomenal start in January. And overall, all the sectors that were really beat up last year have been leading the charge in 2023. Technology, top of that list. Does that continue?
Oh, does that continue? I'm going to say no. I think technology's come back a little bit of the way, but until we see sort of that we're not hitting that recession time frame, I think it's going to be more of a defensive scenario. Banks are getting down right now because of the interest rate things and everything else, but I do think that your defensive plays are going to do a better job over the course of 2023 than possibly that growth area. So that would be sort of where I'd say, yeah, let's hold on to stuff that's a little more defensive as opposed to going right into that growth factor.
There we go. Well, we'll switch chairs here. I'll jump on the hot seat. You can get some of your questions ready. Fire away.
Well, we've already mentioned and sort of hit on things here with rates and inflation, but based on where things are right now and the way stuff is going and the Canadian dollar, do we see that dropping below 70 sometime this year?
Ooh, yes. I'm going to say yes, and it's solely based on the fact that Canada, the Bank of Canada, has been already hitting the pause button where the U.S. has still been talking hikes. So if we see a bit of that, Canada on the sidelines, U.S. hiking rates, the end result will be a lower Canadian dollar, at least temporarily. So yes, we could see the dip below.
Oh, okay. Well, I see that one. So based on what we've seen and all the inflation we've got, I'm going to go back to the sort of interest rate scenario. The U.S., it's already been priced in. Their next meeting, is it a half point or is it a quarter?
I think it's probably going to be a half. I think they're going to come out a little stronger than expected. It's likely actually expected now to be 50 basis points or close to it. They've talked a tough game. I think they got to back it up. And if they do that, they could probably actually do a little less later in the year. So I think they come out strong, 50 basis points at the next meeting.
Yeah. Well, now I've got a two-parter question. We're getting back to that sort of, okay, let's see what's going on in the arts field of departments. John Wick 4. You and I are both big fans. We're looking forward to it. Time frame's there, a week and a half from now. Does John Wick 4 have a better opening weekend than any of the previous three or not?
I think it does. There's lots of anticipation. Reviews have been pretty good. I think John Wick, and the momentum's only been building with each iteration of John Wick. So I think John Wick 4 will have a big opening.
All right, so I'll go with that one. And the final question that I have on this part is, Friday is John Wick, Sunday is the start of Succession. Now season 4, the final season. Who at the end of season 4 will be controlling Waystar Royco?
Oh, that is so tough. I mean, right now it's Logan Roy and ideally whoever he paired up with to do the new deal.
Yep.
I think, twist, shocker. Logan Roy dies. I think that's how it ends.
Oh, okay. So we don't know from there. Well, I think that's the best option that we can deal with. So yeah, again, if you have any questions and you want to know anything about what we've talked about here, rates, inflation, or any of our lightning round scenarios and predictions that we may or may not have had right, go to chatwithclintonandkevin.com. And you'll find that anywhere. We'll give you the questions and the answers that we can. Visit our website if you get a chance as well. Otherwise, I think we've done a good job for covering rates, inflation, and some of the world's hottest topics going on at the moment. But other than that, I think it's the end of what we need to deal with today.
We'll leave it there. Take care.